Hey guys, before we get going, if you use trading apps, you got to check out eToro. It's a good way to gain exposure to Bitcoin and other cryptocurrencies while still getting your fix with the more traditional assets that you might know more about or just want more exposure to. eToro is also a social trading platform, which means it's kind of like social media and trading together. With copy trading, you can copy or just sort of adapt to the trading strategies of some of the best traders worldwide on the platform. This is not only going to give you exposure to how people are buying Bitcoin, but it's also going to show you what people are doing when they're expecting downturns or, one of those bull runs. So head over to eToro.com to get started on your 2020 portfolio today. eToro, smart crypto trading made easy. What's going on? Dave Hollerith here. Whew. It has been a crazy time this last week. The coronavirus has sent some shockwaves into the stock market. Pretty much everything's been affected. But seeing how Bitcoin has reacted to this global health crisis in comparison to the stock market, which took a plunge, and gold, which also took a plunge, but then now is right back up, I'm back again this episode to ask one of our favorite questions in the Bitcoin Magazine newsroom. What is Bitcoin? Is it digital gold? Is it a savings technology, a safe haven asset, a mechanism for freedom, a risky investment, hacker money, or is it just completely uncorrelated? Today, I've got an interview with somebody who doesn't claim to have the answer, but he's sure as heck searching for it. Yassine Elmandjra. He's the crypto analyst at Ark Invest. Ark's an investment firm that exclusively caters to research around disruptive innovation. They use collaborative research to look into things like streaming, autonomous vehicles, battery technology, and of course, Bitcoin. Most people at Ark are also big-time Tesla bulls. Yassine's job is to explain Bitcoin to institutional investors. So naturally, Yassine's analysis is typically very sharp, and it's arguing a use case for Bitcoin to a group of people who might be highly skeptical. I'm not going to try and summarize Yassine's thesis, and if the long-term Bitcoin proves to be a non-correlated asset, it becomes an essential tool for saving value in a catastrophe. Apologies, there's a little bit of static at the beginning of our conversation, so I'm just going to throw you guys right in. Yassine's answering my first question. Is Bitcoin an uncorrelated asset? Here it is.
Really this provable virtual commodity, all the way to it being really the purest form of money ever created, where you have this bare asset that is holding money-like properties, but in the digital world, to things like the auditability of supply and the predictability of monetary policy. And so it's just this really interesting paradigm that we've entered thanks to Bitcoin, and providing kind of a mechanism by which people institutions in particular, can understand that paradigm, and then by understanding that paradigm, make an informed investment decision as to whether or not this is something that is worthy of investment, is really what we're working on, and what I think is lacking in the space, and how to really get people over that hump.
Yeah, and like it doesn't sound like you're describing Bitcoin like money necessarily.
Right.
Yeah, so are you how are you thinking about it in terms of I mean, you said asset, but
Yeah.
so I'm also thinking like, I've seen some interesting moves with people trying to build Blockstack, for example, people trying to build on top of Bitcoin, not just like as a layer 2 thing or a side chain, but another blockchain. There are people basically saying that it's sort of the best protocol to build on right now. Like when we talk about Bitcoin, what all are you talking about?
Sure. So I would still bucket all of this under kind of a monetary realm. Like this I think Bitcoin is, yes, first and foremost money. I refer more so to the idea of like how an institution is going to view this as, where you look at like the traditional definition of Bitcoin is, yes, as this alternative monetary system that exists outside the control of traditional financial systems and outside the control of top-down authority. And so people basically come to the conclusion that, okay, this is just digital gold, right? And to some degree, I do think that is a strong kind of analogy, but I still think it sells Bitcoin short, where you kind of have to look at Bitcoin as a, yes, monetary, but a monetary institution that provides specific assurances to wealth. And those assurances to wealth are then enabled by different properties that the network itself it works under. So one of those properties is monetary properties. So that is kind of the traditional definition that we see of Bitcoin, of like, Bitcoin is money. Bitcoin is divisible, it's fungible, it's portable, it has predictable monetary policies. It's kind of has had like a fair issuance. Its monetary policy is not only predictable, but independent. So wow, this is kind of this digital gold. And this is kind of there is a really interesting case to be made for Bitcoin to provide a mechanism to store and transfer value. I consider that to be one of like three axes that I think is what makes Bitcoin unique. I think the second is really, okay, if it is a novel monetary institution that provides strongest assurances to wealth, there are specific unique accounting benefits that Bitcoin provides to these assurances to wealth. So Bitcoin, for instance, being auditable by design is a core feature that I think most quote unquote institutional investors don't really understand or have a hard time grasping, right? Where it's this idea that you have these auditability guarantees that are more advanced than any traditional economic institution. And so you unlock this unmatched accounting transparency that you couldn't get in a digital gold, and you couldn't get in a gold or even a digital gold. Where if you think about gold, it's very, very costly to verify. You can only verify a single inglet. You can't verify the entire supply of gold. And now you have like Bitcoin where it's effectively a mechanism to, by running a full node, continuously audit the supply, reinforce the consistency and objectivity of this rule set, and not only verify the legitimacy of a single unit of supply, but at any time verify the legitimacy of the entire supply. That is, I would say, far more powerful of a mental model than just saying kind of digital gold.
Yeah.
And then I'll end with like this third property of, kind of these security guarantees that Bitcoin provides, right? So you have these monetary properties, we have these accounting benefits, and then we also have these very unique security model features, where
proof of work, essentially.
Exactly. Yeah. Effectively proof of work, but not just proof of work. You kind of have kind of specific cryptographic guarantees that unlock kind of new paradigms of even thinking about property rights. So I really like, on one hand, this mental model of Bitcoin unlocking the possibility of the separation of money and state, which is what we often hear. I think to an even larger degree, it's unlocking the possibility of the separation of property rights and state, where now you can have extremely strong guarantees to property, agnostic of any jurisdiction, and replaces the need to obtain that security from that jurisdiction with an extremely hyper-competitive marketplace. And so that is something that, it is not really considered, I would say, again, all this in the institutional lens, but I think is a very interesting point that needs to be better addressed. And so without necessarily needing to go into the mechanics of proof of work or needing to explain public key cryptography or digital signatures, it's really kind of this concept of introducing different modes of human organization, furthering the value of these security model features. You then start to see the case for Bitcoin being made, not just as this kind of call option on a new monetary system, but also, let's say, as an asset that provides extremely strong resistance to arbitrary seizure. And so that's kind of an underexplored, I think, aspect of property rights, where the level of seizure resistant embedded into what would be the protected asset itself, right? Where you can have strong form of property rights if you own some land in a country that enforces strong property rights, but that in and of itself is more seizable than something that you can hypothetically just store in your head. And so, introducing these new mental models, and again, all under the premise of defining Bitcoin as this kind of novel monetary institution, is where I think that there's the kind of interesting ground to be made there.
Yeah, real quick though, so you're saying that Bitcoin is sort of an example of unseizable new type of property?
Yes.
Okay.
Yeah.
Yeah, that's really interesting. I mean, can you dig into that a little bit more?
Sure. If you think about what makes Bitcoin unique, I think what makes Bitcoin unique is not in any single technological component, but rather in kind of the way that several technological components breathe life into this system that is Bitcoin. Like if you think about Satoshi's design choices in the early days, I mean, there were very few things that he came up with himself. Everything from proof of work to kind of creating the concept of a digital cash system. His predecessors effectively trailblazed, and he was able to ingeniously kind of fit the components together to create this system. And one of this is elliptic curve cryptography. So to your point about kind of the seizure resistant properties, if you think about what that means, and in the context of Bitcoin specifically, all it takes to own Bitcoin or to interact with Bitcoin is access to a private key, right? If you have a private key, you've basically become a participant in the Bitcoin network. And so you're, as a private key holder, are basically able to subtly and covertly retain access to the wealth stored in Bitcoin, even under these jurisdictions with extremely weak enforcement of property rights, right? Where really holding your Bitcoin private keys means holding an asset that is fully matched by equity, that is no one else's liability, and that isn't, again, enforced by any sort of top-down control. And so you can store effectively your wealth in a passphrase held in your memory, and theft of the private keys is really the only way to seize those assets. There's no way for you to, there's no way for the government to go and freeze your bank accounts. There's no way for the government to go and knock on your door and take the bars under your bed like they would do with gold. You have basically, it really reinvents what it means to be kind of an individual custodian, and opens a lot of doors for the kind of hybrid models which offer basically trade-offs between autonomy and resilience, where if I really wanted to, I could store billions of dollars of wealth in my head, and it doesn't matter who it is. I mean, I would say Bitcoin is not torture resistant, so yes, someone could technically torture me into
popped up in my mind,
right, into divulging my private keys. But it's impossible to indirectly and directly seize Bitcoin, indirectly via inflation, right? That I think is a form of seizure, right? Where you see kind of the currency demonetization in India, you see hyperinflation in Venezuela. To some extent, it's a complete seizure of purchasing power. Inflation to many is kind of this indirect seizure of wealth. Bitcoin is mathematically metered, tops out at 21 million. And so purchasing power and your wealth cannot be indirectly seized. And then you combine that with the fact that it can be easily hidden and moved around, and it doesn't rely on this central party to maintain this list of ownership. And it can be transferred and peer-to-peer. So the cost to verify and transfer ownership is extremely trivial. The cost to forge ownership is prohibitively, if not impossible, to do.
Yeah, along these same lines, do you think Bitcoin is an uncorrelated asset? I mean, I personally, I go back and forth on it all the time because you're always reading a drop or something lately. There's a big Bitcoin drop. I think one of the biggest in history. and it was just like a daily drop, I guess. I mean, but so a lot of people were saying like it's because of the coronavirus, and that's definitely been taking place in the stock market for the last couple of days too. And I'm not going to pretend to be a forecaster, but like, how much do you read into these kind of things? Because at the same time, gold is actually being bought up a lot right now.
Right. That's a very good question. I think a lot of people are asking
Yeah,
this question.
yeah,
I've received
sure.
a lot of inbound on, oh, why isn't Bitcoin, if Bitcoin is digital gold, why isn't Bitcoin up like gold is during these times? And I don't know if you saw the recent CNBC on Squawk Box that Chamath basically came out, and this exact question was being answered. I would say that there are a few questions that like you can then ask from, is Bitcoin an uncorrelated asset? For one, in the context of the coronavirus, Bitcoin were to increase, or like the way that gold has, then actually Bitcoin is not an uncorrelated asset. What that would suggest is Bitcoin is a negatively correlated asset to kind of short-term geopolitical risk and market volatility and uncertainty.
Right.
And so the question becomes, like, is Bitcoin an uncorrelated asset in what it represents? I would say certainly. Like, I don't think that, there has been kind of any sort of quote unquote asset that presents the characteristics that Bitcoin presents, which is also why I like to kind of extend the definition of Bitcoin beyond just digital gold. The reason why I think that people are asking this question and is because in the past there have been some interesting kind of, again, short-term indication that Bitcoin acts in a negatively correlated fashion to kind of geopolitical risk and uncertainty. So there was analysis done on kind of the tensions in Iran. There's been some really interesting analysis done on the devaluation of the yuan against dollars and kind of the inflows to wealth. Looking at Bitcoin as this safe haven asset where kind of a flight to scarcity in this arms race to devalue currency across the world is becoming kind of increasingly attractive. But then at the same time, I think it's important for everyone to just take a step back and also recognize that Bitcoin is still in its infancy stages. It's still, most activity is highly speculative. Most of the trading done, most activity is like via kind of trading. And so when you combine kind of the easy access to kind of exposure to Bitcoin, and the relative ease at which Bitcoin's price can change day over day, and the massive volatility that presents, I wouldn't necessarily discount Bitcoin not being an uncorrelated asset, but the coronavirus is, I think, just indication that this is still very, very early, and this sell-off is kind of a natural result of kind of, okay, is Bitcoin really this non-correlated asset, or is it just very reflexive in its nature, where it's like you're almost like breathing the narrative into existence, and the one time where the narrative kind of breaks, you're like, oh wait, it's game over. What is this? It was supposed to go up when the coronavirus was when everyone's mind is on the coronavirus. So that's one side of things. The second side is that we've done analysis on kind of the traditional correlation tables, and there's some kind of interesting takeaways where Bitcoin provides kind of negative to neutral correlations to traditional asset classes at the extremes, right? And so why is that interesting and why is that important? I think that for one, if you want to kind of use the narrative that Bitcoin is this safe haven asset, then what you want to do is you want to basically have this asset that provides assurances and tail risk mitigation during times of market stress. And so you want to basically, in times of the greatest uncertainty in traditional asset classes, have Bitcoin react differently. And so if you take the maximum correlations in the past, since I think we did this analysis since 2013, between Bitcoin and other asset classes. These asset classes being the S&P 500, U.S. bonds, gold, real estate, oil, and emerging market currencies. You see that Bitcoin actually across every asset classes provides far greater negative to neutral correlations amongst each of those asset classes than what those asset classes provide amongst each other.
So in
Yeah.
other words, it looks completely different from everything else.
Correct. It looks complete. So if you take, for instance, kind of the S&P 500 and U.S. real estate, I have this chart in front of me right now. There's extremely high correlation at the maximum correlations between the S&P 500 and U.S. real estate. Correlation was actually 0.88. When you take kind of the S&P 500 against Bitcoin, you see a 0.35 correlation, so it's relatively neutral. And against U.S. real estate, you see a negative 0.39. So it's actually there's a negative correlation. And so there's also that where it's like you can basically take a data set and look at a case to be made over longer term holding periods, and you look at kind of what the maximum absolute value of these correlations are as a way to kind of play the tail risk mitigation thesis to suggest why Bitcoin is actually negative or neutrally correlated.
So you're not saying it's uncorrelated. You're just saying that it's just freaking different.
Exactly. And so in an ideal world, what we would want for Bitcoin, and I think we're very far from there, is that over the long term, just having a completely non-correlated asset. And I'm talking for an institution, having just this completely non-correlated asset is in and of itself a strategic allocation. It's a portfolio diversifier. It presents different correlations against traditional asset classes and provides kind of this, tail risk mitigation during times of market stress. I think over the long term 5, 10, a few decades, like we will see kind of this complete non-correlation, just kind of arbitrary price behavior and reactions to long-term market sentiment compared to any other traditional asset class. And I think what people are then suggesting, or what others want, is like then over the short term actually being negatively correlated to market uncertainty and kind of, again, geopolitical risk, where you kind of see this as a hedge against some sort of economic apocalypse. That's where kind of the digital gold thesis comes into play, where it would be helpful to have some sort of insurance policy against not only arbitrary asset seizure, like we had said, but also against kind of an economic apocalypse. And so that I don't think is necessarily a good thing over the long term.
No,
I think over the long term, we do want that non-correlation, but then over the short term, kind of having that flight to safety, that indication that, I'm scared of what the next few months to a year might hold for my portfolio. Seeing kind of that negative correlation is I think, Bitcoin's ideal state.
Yeah, because I feel like if it were to be a safe haven long term, there'd be a lot less opportunity for growth.
Right, exactly. And then and not only that, but then you have the kind of the Bitcoin bugs that criticize gold and saying that gold can never see appreciation potential because it needs like in a complete economic apocalypse for it to succeed, right? Where it's like you need to have disaster for gold to succeed. I don't think Bitcoin necessarily wants that, and I don't think Bitcoin is Bitcoin doesn't need that either. Like there's so many new ways to think about what Bitcoin can provide that we definitely sell ourselves short when we tie ourselves too much to this whole digital gold.
Yeah. I mean, I guess I guess it's been an easy way to explain how it's, as I said, freaking different from other assets. Long story short, it sort of belittles the point. So I've read Ark has put out a report on Cash App's growth and volume increase and basically over 2019 as compared with Venmo's. And you did mention that this isn't really an area you cover, But given that, Jack Dorsey has also announced that, Square has sold over $500 million worth of Bitcoin in 2019, I'm really curious about exploring this connection here.
Sure.
Yeah. So like, can or would you be able to make or measure some kind of correlation between Cash App's growth and its Bitcoin adoption?
So let me take a step back and kind of explain the research that you were referring to, which was published by our fintech analyst, Max Friedrich. And he's covered Square extensively. And, he's the kind of person that you'd want to talk to about this stuff much more than myself. But I do have an angle on kind of Cash App's positioning with Bitcoin. But the report that you were referring to was around Cash App kind of having surpassed Venmo in monthly active users. And the incredible growth that we've seen in Cash App for a lot of reasons. I mean, Max had published a piece on kind of Square's viral marketing strategies that have attracted users, everything from kind of Cash App Fridays to kind of being very, very involved in social media, to like kind of the design genius behind kind of the Cash App marketing team to create this really interesting relationship that Cash App has had with its users. From what it's been able to do with the Cash App specifically, and kind of our digital wallet thesis more broadly, is that it's doing things that traditional banks can't do. One of the things that we look at Ark, I would say less so with Bitcoin and crypto, but more so with our other technology platforms, is that we think that cost declines in particular are our primary force behind tech-enabled disruption. And so that also holds true for kind of consumer banking. So we like to base a lot of our research on this concept around Wright's law, which is basically kind of a derivative of Moore's law, where Moore's law is a function of time, Wright's law is a function of production. So the question that we ask in kind of modeling cost declines is, for every cumulative doubling of units produced, how much do costs decline? When you kind of think about things like the electric vehicle market, when you think about the cost to sequence a genome, these sorts of things present really interesting takeaways on how cost declines are effectively a catalyst for exponential growth in usage. To a certain degree, we can also see that with the Cash App, where in digital wallets more broadly, where the customer acquisition costs are extremely critical in determining kind of not only the profitability of checking accounts, but just the ability to acquire the customer and then have that customer as a part of the broader ecosystem at large. And so when you look at like the customer acquisition costs of digital wallets versus kind of traditional banking, we've estimated that digital wallets customer acquisition costs are between $10 and $30, and the customer acquisition cost of a traditional bank can be in the $1,000 range. And so that metric alone, it answers your question around why we've just seen a massive adoption in digital wallets and just consumer banking in general, where customer acquisition costs are a fraction of what we see in traditional banks. And you combine that with the amount of data that these digital wallets are able to collect compared to traditional banks. And this is kind of just a glaring sign for disruption. Now, when you then combine that with Cash App in particular, and compared to Venmo, and this is where we see kind of the crypto angle, the most interesting and telling sign for why the Cash App is onto something when it comes to Bitcoin is really just looking at Jack Dorsey's take on Bitcoin more broadly. If you listen to Jack Dorsey talk about Bitcoin, I think he's really the only or one of the only CEOs of a public company that really understands Bitcoin. That understands Bitcoin not as like this payment revolution, but really as this monetary revolution. So everything from Square's decision to spin up Square Crypto as an independent subsidiary, to all the way to providing this really interesting and easy mechanism to buy and sell Bitcoin through the Cash App, all while knowing that like it really doesn't stop there. In the call yesterday, in the earnings call, I mean, Jack Dorsey basically said like, this is only the beginning of our adventures in Bitcoin. And if you look at kind of Bitcoin sales in 2019, they were able to generate, I think, over $500 million in sales. And that is something that I think is only going to continue to increase as you know, Cash App and Square in particular begin educating their existing users who aren't familiar with Bitcoin on Bitcoin. So a really interesting anecdote about that is I was at a Syracuse University talk where I was giving a talk about kind of the case for Bitcoin and why it's interesting. And at the end of the talk, a lot of people asked, you know, so how do I buy Bitcoin? And I asked them, I asked them, like, do you have Cash App? And they're like, of course I have Cash App, but why would you even ask that question? And I'm like, well, because you can buy Bitcoin on the Cash App. And they were so shocked that you could buy Bitcoin on the Cash App. And they opened the Cash App and they realized, oh wait, yeah, there is a Bitcoin toggle. And now I can buy $10 worth of Bitcoin. And here's where I learn about Bitcoin. And so it's really like this interesting like dynamics that are being played out where I think Cash App is in a prime position to become kind of the leading provider of Bitcoin to kind of retail, not only in terms of buying and selling, but also in terms of educating. And we've really started to see that. I mean, the volumes that have been impressive. There's been some like moon juice memes going on about how much volume Cash App absorbs through Bitcoin sales of newly minted Bitcoin. And I think like the metric was like around 10% of newly minted Bitcoin is basically absorbed by the Cash App sales. And so I think that rather than saying, you know, we're seeing growth in Cash App or growth in Bitcoin grow Cash App, I think growth in Cash App will grow Bitcoin. And we've really started to see kind of where the Cash App is most prevalent. There's some really interesting analysis that Max did around looking at kind of Google Trends for Cash App by state.
Yeah,
and
I saw
overlaying that with kind of the FDIC's unbanked rates by state. And you see that, yeah, most of the Google trend activity or Google search volume activity are in unbanked states, which are southern states. And so when you think about the case to be made for Bitcoin about, you know, not necessarily needing to go through the traditional mechanism to bank your assets, this becomes an all the more compelling reason why, you know, Cash App is going to help fuel kind of Bitcoin's adoption.
The data is basically saying that most of Cash App's, it's coming from the Southeast.
Yeah, you're absolutely spot on. I mean, so there's like an uncanny overlap between the Cash App and the unbanked. I wouldn't necessarily say it's because of the Bitcoin, but it's definitely it's actually they have a very cool direct deposit feature that Square had introduced in 2018, where you with the Cash App you can basically generate routing and account numbers, like if you were to have a normal checking account, that you can then give to your employer to facilitate a deposit onto your paycheck into the Cash App directly. So
Wow.
this is a big deal if you think about it in terms of like why this would be so useful for someone who's unbanked. I can now, you know, be an employee. I don't necessarily need to have a JP Morgan account. I can, you know, go on the Cash App. I can, you know, go through pretty minimal KYC. I can generate my own routing and account numbers, and I can literally receive direct deposit every week or every other week onto my Cash App directly. I can then use the Cash Card to purchase, you know, like basically have a traditional debit card. Obviously there are a bunch of boosts that Cash App provides, you know, 1% off of coffee or get your cash back. And at the same time, you know, I have this other valve that is in Bitcoin, where I can, you know, purchase Bitcoin. I can learn about Bitcoin. Oh, and by the way, you know, Cash App just released a new feature of, you know, investing in stocks. So now I can, you know, purchase fractional reserves of stocks. So if you think about kind of this concept of having an entire bank branch in your pocket, and Cash App being at the forefront of that, and the POS system that they've been able to create with their merchants and their SMBs, this becomes like a really interesting angle and niche that Square has created, that is evolving into something much bigger than what people expected.
In Square Crypto's open source grants to Bitcoin developers is huge.
Oh yes, and that's a whole other discussion.
Totally.
And I'm curious to get your thoughts there as well. But when we saw that, we were like, okay, this is definitely something that people, I think, aren't realizing. I've said traditional analysts don't really realize.
Yeah.
But that we just said that this is a big deal. For one, I think that being extremely intentional in creating an independent subsidiary that is not looking into kind of Square's short-term profit interests is very indicative of like how aligned Square is with Bitcoin's ultimate value and mission in what it's providing. So it's like, we're not looking for in Square's commercial interests right now. We ultimately think that Bitcoin's success is Square's success, and so we're going to do everything we can to help Bitcoin succeed. And so you hire, the Matt Corrales of the world, the Valentino Wallaces, you have Stephen Lee, who's heading Square Crypto, and you come up with this really dynamic team of people who are exclusively focused on Bitcoin as an open source network more than they're focused on kind of Square and its commercial interests. And I think this is a very savvy move from Jack. And I think that it answers two questions. The first question around a lot of people have around the sustainability of Bitcoin and maintaining it from like a tech and development perspective, where it's like, who's going to fund the developers? Well, it's going to be massive companies who have interests in Bitcoin's success who are going to fund it. And I think as a function of that, Square has really put pressure on any, be it public or private company, who has an interest in Bitcoin, not to kind of commit resources to Bitcoin. And so there's some very, very interesting dynamics that I think will play out as a result of the Square Crypto.
Speaking of large companies that have some sort of stake in crypto, well, I really like your Satoshi Bitcoin talk posts. But I was going to actually bring up the Libra Hunger Games tweet thread you have going on. Can you sort of explain it?
Sure. So that tweet thread was like, I created like a Hunger Games Libra edition where after there had been I don't know, like 28 members who had committed to being a part of the Libra Association, we started to kind of see a massive drop from initial members who had committed, partially because they had committed without really knowing what that commitment entailed, but also because we've seen kind of the regulatory backlash that Libra has faced since Facebook had announced that they would be creating this. So I'll start with saying that I think Libra was actually a very interesting catalyst in putting crypto, however you'd like to define that, on the map.
Yes.
Yeah, from a regulatory standpoint in particular, right? Where you all of a sudden had a bunch of people who, I would say like everything from congressional hearings to regulatory working groups, who said, okay, we need to stop this because this could potentially threaten our monetary sovereignty. That was kind of really interesting to see play out, especially because over the same time period, Bitcoin slowly kind of working in the back. And so I think part of the backlash that we saw with Libra was because, there was a neck to choke, right? You could point your finger at Facebook and say, we need to stop this and we need to do everything that we can. And you combine that with the fact that Facebook isn't, necessarily a crowd favorite. Yeah. You have kind of a recipe for disaster. So we saw, PayPal, MasterCard, eBay, Stripe, all of them kind of just completely backed out. Part of it was because they were receiving regulatory pressure. And then another part was, wait, does this actually kind of compete with our own core competencies? And so, yeah, the thread is basically like, over time, I add to the thread. I probably should add. I should have probably added today, because there was a Tagomi had announced that they would be joining the Libra Association after Shopify joined. So that was a really interesting development. They're a well-respected prime broker in the crypto space. But I would say that, this regulatory backlash on Libra is not something that's surprising. It's a very easy target.
Totally.
I think that, there are questions of whether or not they'll even launch. I think that they're probably going to launch. I think they're going to be a lot more restricted in their ability to launch than they had initially anticipated. There are obviously talks about switching completely to fully USD backed reserve. I think that that could be something that they explore, and then obviously their ability to penetrate emerging markets is going to be very difficult, because realistically something like Libra could threaten these less developed monetary regimes. And so you think about the ability to hold kind of a USD backed coin on your phone in Venezuela. No one really cares that the data got leaked on one of their Facebook messages. So there's going to be some interesting dynamics that play out there as well. So what are your thoughts on Libra?
Pretty much everything you said. I mean, I think so in some ways, to me, as somebody who likes the idea of a decentralized cryptocurrency, as opposed to a cryptocurrency that's like completely controlled by one of the most like largest tech companies, and probably the one of the lowest sentiment in the world, and I think with all that into context, it's like not what you want. And it also takes a lot of what comes out of Bitcoin and even the broader cryptocurrency of like what people want the future to look like, what people want the internet and money to look like in the future. And it basically just says, no, we're going to just keep things exactly how they are. And so like has nothing to do with, how markets work and stuff. But I think that from a sentiment perspective, that's kind of how my interpretation of it. And then I also think that it's a huge red flag for like the U.S. government, just because Facebook is in some ways more powerful than the U.S. government at this point. I think. I mean, that might be, maybe that's an oversight, but at least as far as a network goes, I mean, they have more users than anyone else in the world. As far as like.
Definitely. I mean, it's like 2 billion users. Yeah, it's like this interesting shift in how nations or states or nation states are now not necessarily defined by borders. Like Facebook technically like the most powerful nation state in the world.
Like the idea of privatized money is like cool and interesting, but like I way more would prefer to see decentralized money become. And actually that was another question I was going to ask you, is like, how do you feel about people like the thesis? I've heard you talk about this too, like the thesis that cryptocurrency is sort of like a winner take all scenario, or currency is sort of a winner take all scenario.
I think that's part of our like philosophy around value accrual. If you really look at kind of the different investment philosophies in the crypto space, I would say that the most salient distinction is tech versus money, right? Where you kind of have your innovation maximalist, where they look at kind of these networks as being software first, and then you kind of have your monetary maximalist, where you look at these networks as money first. And of course, this is from an investment lens. If that's the case, you have like the kind of the software first mindset, where the killer app is not money. The killer app is kind of this concept of multi-sided marketplaces and creating kind of protocols, not platforms. And so the investor focus and the focus on networks is around kind of the expressiveness, the composability, the upgradability of these quote unquote base layer protocols that have large feature sets. And so you think about what the network infrastructure priority there is, and it's around scalability and it's around feature sets. Then you have that money first mindset where the killer app is money. Like everyone says, what is Bitcoin's killer app? Bitcoin's killer app is Bitcoin. Or what is, crypto network's killer app? It's right there in front of you. It's like Bitcoin is both the culmination of predecessors and the seed of this breeding ground for experimentation.
Yeah.
But at the end of the day, it comes back to Bitcoin.
Yeah. That goes back to the thesis of like narrow waist.
Yeah.
Which is like another one that's being talked about. Is it's sort of, I mean, it sounds like you're leaning that direction when you're sort of when you're looking at it in other ways, like property and things like that.
Right, definitely. So I tend to take the view of like a money first mindset when it comes to kind of investing in value accrual. And so this goes back to your question of, you think this is a winner takes most, if not all? Mm-hmm. And the answer is I do. And the reason being that at the end of the day, like these assets, however many features they have, I think to some degree just are forms of money. And they act as money, and they're either money or they're kind of money but obfuscated by technological jargon.
Yeah.
And you have other assets that like a work or like a discount token model or work model, in which like those act more like securities where you can actually project some sort of cash flow. But I would say that the non-productive assets are money. And if you think historically about how goods accrue a monetary premium in the past and how kind of these goods become valuable, it's the largest driver is really reservation demand or the willingness to hold. And I think, monies and what they represent, it's like it almost doesn't make sense to be contrarian when it comes to money. Like you want what everyone else is using. And so money is an extremely strong selling point. Kind of the network effects are strong, like kind of indicator of the potential success that money might have. And by success, I mean, eventual value accrual. And then beyond that, it goes back to the discussion we had previously around kind of, can this money provide assurances to wealth? And so when you think about, how can is money going to be transferred and stored seamlessly? Is money going to be diluted arbitrarily? Is it going to be frozen or seized? Can we audit the transactions? We think that ultimately Bitcoin in particular is going to be best equipped to fulfill these assurances. And as it does, we'll start to see kind of these, at least in the crypto space, this power law dynamic of kind of, you have a large share that's attributed to the winner. And then you have kind of your 2 or 3 or 4 that are unique enough to Bitcoin, but that provide these similar assurances to wealth as a form of money. So I think that like the pray and spray model and the diversification strategy that we've seen in kind of traditional VC does not lend itself well to value accrual in the crypto space.
Yeah. A lot of people have made that mistake, and like I mean, I'm not speaking for you, but for me, like I think hindsight is like
right
is what I'm speaking to. Like I was around during 2017, and everybody went a little bit crazy back then. But I mean, what you're saying makes a lot of sense. Yeah, I mean, I don't want to dig too much more into this. That's all really interesting, but I wanted to like go back down to earth on everything we're talking about and just ask, like, how do you actually manage your day? You've mentioned Twitter's a huge part of it, but you also write a lot, it seems like, too.
I try to. I mean, there are a few things. I mean, my job is split between kind of research and business development. Mm-hmm. So a lot of it, I would say it's split evenly, half and half. But if we just focus on kind of the research side, I would say that, Twitter is definitely kind of my initial screen. I'm also a consumer of a lot of podcasts, so I enjoy kind of listening to podcasts. Everyone who's on Twitter also knows that, there are some Telegram chats that, have some high signal to noise ratios that I try to look at. But effectively, I think that it's the beginning parts that are very, very difficult to filter. Like, there's so much noise out there.
Totally.
That's kind of the initial kind of, I would say, vetting process that I would say took me a while as I was starting this job. But once kind of starting, I think it becomes relatively easy to identify like something that's interesting versus something that's less interesting. And then I would say, like, just, collaborating on research with other, brilliant minds in the space has furthered my thinking. I would say, collaboration, even as much as like a simple phone call, catching up with someone on the West Coast of like, okay, what are your thoughts on this? How's the general market sentiment there? So you're able to kind of gather, 10 to 15 people that you really trust, that you respect their ideas tremendously, and then they become kind of that disseminator of information.
Your go-to for a certain something. Yeah.
Exactly.
Yeah.
Exactly.
Yeah. And I mean, that's like you're defining, like, basically building a solid network.
Exactly. And I think that the beautiful thing is that it's not building a network in the traditional sense, though, right? And that goes back to kind of Twitter and again, the idea of like an idea meritocracy, where, some of my closest, most well-respected individuals in the space are pseudonymous accounts and some of them I've never met, and some of them I've never spoken to. And yet I can still respect the ideas in and of themselves and separate the person from that idea. And you come out with some very, very interesting insight in this new world of like kind of sharing information. So it's been awesome.
I'm going to say, in general, Twitter is way more helpful and insightful than the darknet, but it kind of has that same thing there, where there's a sort of a different kind of like transparency.
Yeah, it's like a free for all, and then it's on you to kind of attempt to filter out
Make
the
order
signal from the noise.
Yeah.
And then from there, it becomes like a very interesting way to learn. Like I've learned so much on Twitter. I would say that genuinely every single sentence that I've said is more of a synthesis of what others have said.
Yeah.
And it is like an original idea. And I think that like being able to synthesize oftentimes is even more powerful than figuring out a new or original way of thinking about something.
Yeah, I mean, you've also interviewed on Ark's FYI podcast, which has had some incredible people like Musk and Charles Graeber. But you've interviewed Hasu Antonopoulos, probably had a lot of incredible conversations and been exposed to some pretty incredible thinkers, is what I was thinking. So, like, given all that, like, how do you sort of learn from these people you get a chance to interact with and like filter your thinking from them?
Yeah, I would say it goes back to Twitter, honestly.
Yeah.
So actually, I met Hasu obviously on Twitter, and he actually, the first time I had exposure to him was through a podcast in which the exact same question was asked.
Really?
Weird. And yeah, I know. And I think that his answer is pretty much spot on with my approach, where you basically, gather a few people that you think are very interesting in their ways of thinking, not necessarily people that you agree with. Uh-huh. And you like almost religiously follow them and what they say on Twitter and in podcasts and in interviews. And in doing that, like over a few month period, you can pretty much develop like the perfect mental model for how they think about things, right? And so, someone like Andreas, he's less active on Twitter, but he does a lot of interviews. He has a lot of YouTube videos. Mm-hmm. He's written a few books. You can effectively kind of take what his approach is to this entire space and understand, okay, this is like the Antonopoulos model. And then basically just pick what's interesting to you, things that you agree with, and then forget things that are less interesting to you, and then you move on to a new mental model of someone else. And so I know Hasu, for instance, his first mental model was where he did this, where he basically turned on the notifications for every reply, every retweet of Nick Szabo. And he was kind of the founder of BitGold. And yeah, so he's written a lot of very interesting things around Bitcoin. And so kind of the Szabo mental model is understood. And so now you go to a new mental model. So it's like, if you can kind of gather 10 to 15 to 20 people who are well regarded and really try to understand their every move, then from there you can create this interesting, and I would even argue original synthesis of everything that's going on in the space.
Well, so is there anyone in particular you follow outside of the crypto community? But I'm curious if there are like other people who are alive still, or maybe dead, who you also look to a lot for sort of a mental model to strive for.
Obviously, I would say reading books is helpful. I like someone that comes off the top of my mind, and actually I wrote something around this, is Thomas Sowell, is like a very interesting economist and like social theorist that has a really interesting way of kind of looking at social and public policy, that in fact could provide a framework for a lot of the divides that we see in crypto. And so a lot of people like to say a few things about Bitcoin. One, that like the rabbit holes are extremely fractal, where it's like you fall into one rabbit hole and you can spend years just on that rabbit hole. And then two, it's like they're also extremely interdisciplinary. Like understanding Bitcoin like requires understanding a lot of things, that, or at least piquing your curiosity about a lot of things. So I think that like there are more things than not that could relate to Bitcoin than most people realize. That there's obviously the danger of like kind of force fitting everything into, Bitcoin fixes this, or this relates to Bitcoin, or. But at the same time, there's so many things, from the way that humans, like just human psychology, to things like public policy, to things like kind of the economic policy, to how the world works. Like Bitcoin opens up so much for just learning about how the world works, as cliche as that sounds, to then get the opportunity to explore things beyond Bitcoin, but that then ultimately comes back to Bitcoin in some capacity.
Yeah, you can look at it from the technological aspect, the sort of like security aspect, which is like, I guess, technological, economic, like you're talking about. Historically, I mean, just people do that all the time, where they look at different monies. And obviously there's a huge sociological component too. So, I mean, yeah, I totally agree with that, honestly. It's easy for it to become sort of like a way to think about everything, because it's a new thing, meaning that it's happening right now, so nobody can really predict what it's going to be, what it is, and that sort of gives everybody at zero advantage. There's no sort of like expert, like health insurance sales is like a completely different matter. There are people who just have like relationships and stuff like that completely separates them apart. And then there's also the aspect that it's just completely turning the concept of money on its head. So
definitely.
Real quick, I just wanted to do a section I sometimes do on the show. I call it underhyped or overhyped. So I'm just going to name something, and it's like rapid fire, and you just tell me whether or not it's underhyped in your mind or overhyped, and then you just explain why. If it's too bad or you don't want to answer, you just don't answer. Okay, so underhyped or overhyped. Knowing who the real Satoshi is.
Knowing who the real Satoshi is. Definitely overhyped. I don't want to know who the real Satoshi is.
I think it would kill him in a lot of people's minds. You know, Jack Dorsey's influence on Bitcoin.
Underhyped. Do not underestimate what he's doing.
A college degree.
Overhyped. Yeah.
What did you study in college?
I studied systems engineering and finance.
Nice.
Yeah, but I think that like it looks good, right? But I will say that these last 2 years that I've been at Ark, I've learned so much more than, the 4 years I was in college by orders of magnitude. So overhyped.
What about a college degree is like a sociological experience?
I think the college experience
Yeah.
is certainly important. I think that like it's a very interesting phase in your life where, you're mature enough to have an understanding of who you are and trying to figure yourself out. But then at the same time, you have zero responsibility but to
Right.
learn. So this is certainly not to say I don't recommend college. I think that just the concept of a college degree where you need like a stamp of approval to get in the door is so misguided.
Yeah.
And I think that, if you're going to have to take hundreds of $1,000s of loans just so that you can get that stamp of approval in this day and age, especially with social media and the ability to kind of easily produce things that people can see, there are ways to be as successful without a college degree.
I agree with that too. There are cheaper ways to have the sociological experience too. You do a commune or something.
Yeah.
Underhyped or overhyped? Morocco.
Morocco is definitely underhyped, and I might have a little bit of bias because I'm from there. I try to bring, every year a few of my friends. We go road tripping. Very funnily enough, going back to Twitter, last year it was with two buddies that I met on Twitter. One's in crypto, another is actually kind of a self-made writer, and we just went on a trio road trip. And you can ask them if it's overhyped or underhyped. Travel with the car, they're like trains. I mean, the cities are not very far from each other. Maybe like a 2 or 3 hour drive, and you can see kind of 4 or 5 different cities that provide a good, unique experience. And a beginner's level introduction into Africa.
All right, COVID-19.
Ooh, I had a feeling that this was going to be asked. So this might trigger a few Bitcoiners who said that we're going to die, everyone, but I think it is overhyped. I think the number of cases have been underreported, and as a function of that, the mortality rate has been slightly skewed upwards. However, I do think that the consequences of the fear mongering can potentially have graver implications than coronavirus itself.
Okay, Yassine, that's it. And where can people go to find out more about Ark and to follow you?
Sure. You can go to ark-invest.com. You can subscribe to a weekly newsletter that we put out, and you can follow me on Twitter at Yassine Ark.
And I'm actually subscribed to that newsletter. But anyway, man, thanks a lot for taking the time to talk.
Thank you, man. Thanks for inviting me.
The Bitcoin Magazine podcast is a BTC media produced podcast on the Let's Talk Bitcoin network. You can find us on Twitter at Bitcoin Magazine, and you can find out about other engaging shows we produce by subscribing to our feed on iTunes, Spotify, or wherever you get your podcasts. Thanks for tuning in. See you next time.